Okay, good morning, everybody. This is Dennis Wilborn with the Active Trend Traders and David Grandy from All About Trends. Good morning, David.
Good morning, Dennis. Good morning, everybody.
And we're glad you all could make it today. We hope you are enjoying this exciting market and all the interesting opportunities it's providing. Although we may question how big are the opportunities, but it is definitely an interesting market. I went out and to San Jose and had lunch with David yesterday, and I got to just tell you guys, David works out of a really cool office that has just a bird's eye view of almost all downtown San Jose, and it's absolutely awesome. And I want to thank you, David, for inviting me down. I really enjoyed getting to share some time with you.
Likewise, it was really great. I'm glad you got to see the operation.
And so yeah, and lunch was good too. So
yes, it was. The room was very nice.
Anyway, I want to remind everybody that all the materials that we ever present are for training purposes only, and that traders should always paper trade any new method prior to the risk of their own personal capital. Remind everybody that. The Money Show is coming up, and you get to see all these wonderful, great speakers. And no, I haven't changed the slide because there are two other wonderful, great wonderful speakers who will be there for the Money Show February 5th through the 7th. And David, I think we are presenting on the 7th.
We are.
Excellent. If you are down in that area, or you know somebody who's down in that area, please have them stick their heads into the presentation. I think it's, what do we say, 9 o'clock in the morning?
I think it's noon.
Oh, at noon. Okay.
Yeah, 9 o'clock Pacific, but noon Eastern.
Okay, so it's on the 7th. Please stop by, say hi, and we, of course, will be offering some wonderful incentives during that time period. So David and I absolutely love to talk about stocks, and we got together for lunch yesterday, and guess what we talked about? Stocks. And so we did.
Imagine that.
Huh?
I said, imagine that.
Yeah. And we talk about a little bit of the differences between, the two systems we trade and that type of thing, and complemented each other on the trades that are going good, and so it was really cool. But if you have a trading group, and it doesn't matter whether it's a meetup group, because we have presentations that can be done for IBD meetup groups that are specifically designed for IBD meetup groups, or meetup groups of just investors or traders. Dave and I are willing to, one, go anywhere in the Bay Area, and two, if you are out of the Bay Area, we can tap in via a webinar. I've done that several times for groups all the way back in Delaware, Denver, Florida, and it's really fun to be able to tap in long distance and do those webinars. And when we're done, we provide a recording of the webinar so that you can share that with the members of your group. So anyway, if that interests you, just give me an email right here at dww@activetrendtrader.com. Let's see what else we got going here. So let's get on with the market update. Where were we last week? Little if any order, big downs, big ups, initial negative January effect. The negative January effect has not gone away, but the question I have to ask going into this weekend, is it time for a bounce? And will the bounce be just a mere relief rally, or a more serious revision and reversion back to an uptrend? Typically, the years that end with 5 historically have been positive years. However, as we've seen over the last few years, some of what in the past has been historic type of, you can't necessarily rely, what I'm trying to say, you can't necessarily rely on the historic background for a market, because in reality, given where we were in the cycle, last year should have been not per se an up strong year, but the market was up, what, 11, 12, 13%, Dave, is something like that?
Yeah, that's right. I think so.
Yeah. And so, anyway, the S&P is looking for support, and we'll be looking at the chart of that shortly. NASDAQ at support, but NASDAQ is looking a little bit weaker than some of the other indexes that I track. And the Russell is bouncing off the 200-day moving average. And will it be a relief or will it be a real rally? One of the things that I always look at outside and earning influences, we kick into earnings a little bit more in a greater way this next week, and so we'll see how the market reacts to that. I anticipate that the stocks that hit the mark, provide the surprises for earnings, and all that kind of stuff, the good surprises, will be rewarded nicely. However, the stocks that fail to meet the, either they just come in and meet their expectations with nothing, no positive surprises, I'm anticipating that those stocks are going to get hammered pretty well, and will fall from the sky. So it's one surprise after another. The U.S. stock market still appears to be the only game in town, or are traders getting tired? This bull market has been in effect now, pushing into its 6th year, and I'm not going to say that that's exactly when the market is going to turn around, but we do have to be aware that the bull market is long in the tooth. Many of the talking heads out there, or many of the folks who analyze markets, are saying it would be really awesome if we had like a 20 or 25% correction to basically level the playing field again, to ignite the fuse for larger gains, which, you go back to 2008. And that's one of the things I suggest folks do, is go back and look at the chart from 2008, both the daily and the weekly, and compare it to the chart of the market right now. I'm not going to say 2015 is going to repeat 2008, but it is. It's worth keeping an eye on what could happen. Moving on to the percentage of stocks above the 20-day moving average on the NYSE. Last night we triggered just below the 30% level, where 30% of the stocks on the NYSE above the 20. And one of the things that, from a market strength standpoint, this bounce from the mid-December ran right up here. And while the market was making a new high, it was making a new high with fewer stocks involved. And then we get this huge sell-off at the beginning of the year, bounced a little bit, and now come back down into the oversold arena. Will we hammer around down here like we did back in September, October of last year, or will this be a real quick plunge down and then zip right back up? Time will tell. We'll have to wait to see what takes place with that. But we're midday. We're about 30.5, and that's a kind of a baseline mark that we keep, line in the sand, if you will. When things get below that 10, they tend to start bouncing back up. And this is one of the indicators we do use with our early warning alert system, but only one of them. Some of the other ones are proprietary that we use, and right now we've got an alert but no trigger. So let's take a look at, excuse me. There we go. Let's go to the charts. Okay, SPX. SPX, this is what we're talking about. I was showing this to Dave a little bit earlier, and some of you may have been watching as I was showing it to him, you just couldn't hear us. On Wednesday of this week, the S&P put in this really nice little hammer. Hammer is a bullish reversal signal that happens at the end of a downtrend. So yes, we have a downtrend, had a hammer. We're right at the top of the magic fib box, and this fib box was placed in here by measuring from this low back in October to this high in December. And on top of that is the 38.2% retracement. And as you can see, it coincided almost exactly with this 1991, which was a former support level. As you look over here on weekly chart, you can see this is a support zone, and so price is retracted to the support zone, and we're going to see what happens when we get down to either the 40-week moving average or the 200-day moving average. The 40-week moving average emulates the 200-day moving average, not exactly, but it is close enough. So what are we seeing for today? We are getting a bounce off support. However, the downtrend is still in play. The short-term downtrend. We've had the 8-day has crossed below the 20, below the 50, so we've got two bearish crosses there, and the 20 and the 50 are now forming a level of resistance up here just below the 2050 level. And so I would not be surprised to see if this is a relief rally for it to come up here in low volume, maybe hit this downtrending line, or maybe even go on up here and hit and retract. And it has to get through this 1990 level before we would see any further downside. What else could it do? We could also see the market just stabilize here, bounce, pause here a little bit, and go this way also to retest these old highs. Will that happen? As we said, time will tell. Right now, that does not seem to be I see the bounce up here and then a retract here, primarily because of the weekly chart showing the weakness that it shows. It looks like it has at least about a week and a half of either consolidation or further down tracking before we'll get a healthy bounce. And it's these healthier bounce like there. Here's some good ones, but looking at the stochastics and this momentum shift. And as you can see on the weekly chart, we're getting momentum here is all still pointed down. Take a look at the NASDAQ really quick. NASDAQ was weaker than the S&P. I don't know. David, I'm so excited as I'm waiting for my computer to respond. I'm so excited that my new computer comes today. And so I will be setting that up. So hopefully these delays will be a little bit less hectic than they have in the past. Although it hasn't been too bad. Anyway, I've got a support level here, just below the 4100 level, where we get a bounce this morning. But as you can see, it's moving right back up into this whole area from here, about 4120 down to this 4090 level is a support zone. And so it can bounce around and hit on that and potentially either bounce back up through it or fall. And one of the things to pay particular attention to is look how well this has been respecting the moving averages of the price on this. It came all the way up, tested the moving averages, but then as it starts to fall, it's following that 8-day moving average very well. Right now we have, with a slight, the hammer that was in place from last week has now been voided because the low of it has been taken out by this week's price action. So for the NASDAQ, what we've basically done now is we've got lower low, not a lower high, not a lower low, but now we've got a new lower high, and now a new lower low. And those of you who follow trend patterns, you recognize that once a lower low is established, that can be the precursor to further downside. So, David, can you still hear me okay?
I can hear you just fine.
Okay, cool. Anyway, we've got some really nice ranges here on the index, on the NASDAQ and the S&P and the Russell, that one can, plan their trades around. But remember, the trades are going to have to be fairly quick. The trades right now are kind of like we're looking for more base hits. So you may get 5%, 10% on individual stocks, maybe even 15%. but the be satisfied with those quick 5+% moves. The bigger 20% moves just aren't in the cards yet. Russell came right down to the 200-day moving average this morning and bounced. It too has set up lower high, now a lower low, although it is bouncing up from the lower low, and the 200-day moving average did hold as support. What's very interesting, here's a really good example. This dotted red line here is the 40-week moving average. See how well it corresponds to the 200-day moving average. One of the things to look at the Russell is, look what's happening here. We're getting basically a flat line with this longer term moving average. And the way I interpret that is that longer term, the Russell may be going into just basically no trend. And what we may see is just a continuation of this expanding top over here, this expanding top over here, where it'll pull back down to a level of support, bounce back up, pull back down, and actually, make very little progress. But we'll see what happens with that in the international scene. Any questions on the indexes, guys? Okay, if not, Dave, I'm going to switch the screen to you and make you and you have the con, my friend.
All right, thanks, Dennis. So the big question is this yet another buy the dips opportunity? I mean, no matter what we think or feel or want to have happen, it's all about what the market actually does and what leading stocks actually do. And every time we've had this situation where, oh gosh, here goes the market, it's finally going to go into a big correction, what happens? It starts taking off again, eventually finds its footing and has ended up making new highs. Will this happen again? I don't know. We'll find out, because we're definitely in that zone right now. But right now I have to respect that trend. That has been the reality each and every time we've been in this situation, and I have to respect the support levels on the indexes and in leading stocks. So that's how I feel about it. So in our trading plan, this is a great time for us because we don't chase stocks. We let them come to us. We've got a lot of stocks at support in tandem with the indexes, trying to find support here. And so this is the time to take a look at doing some buying here as long as those support levels hold. So let's take a look at the NASDAQ quickly. So again, we have these blue lines clearly defined here, and we haven't violated any of them yet. We're very short-term oversold. Same thing goes for the S&P. We took a little dip over the first one today, but we're making a nice bounce. It's actually much higher now than what this chart shows. Again, very short-term oversold. So these are the things that we look at, and just allows us to have a non-emotional approach to our current positions and stocks on our watch list, and just allows us to simply trade what we see. And right now we're seeing the indexes pulling back and finding support just like they did in December. Will we get this huge run up? I don't know. We'll find out. But so as far as all I can know right now is what I see, and what I see is a market trying to find support, and thus far is holding that. So I talked about Virgin America last week. This is what it looked like last week. We didn't take the trade here, even though it technically triggered by breaking above this pink line. Why did we take the trade? Because it's in the middle of a trend channel. I mean, it's kind of no man's land for us. And by waiting, this is what it looks like today. You can see it's pulling back even further, but it's got support levels here. We're not too far away from the bottom of the upward trend channel that it's been trading in. Again, very short-term oversold. So all the conditions are ripe here, and we might end up picking this one up in the next day or so. This is Facebook. Again, it was a failed breakout. Those that bought it up here got stopped out as it pulled back, but it never broke support. It this is what it looks like now. Yeah, so yeah, it broke support of the trend line, but it's holding above this lateral support, which is kind of the final line in the sand for it. There's also some support down here at this low, but you know, this is an index name, so it's not surprising that it's rallying in tandem with the index. It's, again, very, very short-term oversold, almost washed out. I mean, yesterday just felt like one of those washout days where it started to just get a little bit ridiculous, where it's like, all right, come on, you know, we've pulled back so far, and now we're just kind of putting some long tails in on the charts here, and we're in the zone here where we should start seeing a lift at some point. So so while yesterday wasn't fun, it was just more of a, it kind of is what it is, and it's what we need to see to finally get a lift, and so far that's what's going on. Here's SLCA. We talked about the energy names. You know, energy obviously has been very washed out, and we started to see some positive chart structure in the energy names, and we had this first thrust up, we had this pullback, we made a higher low here, and this is what this is what it looks like now, where it's starting to move up. So and that's exactly, you know, it's doing exactly what it's supposed to do. So we'll see if we see more of this in the energy sector, and if that ends up bringing energy prices back higher again. You know, we'll see. But so far, there's definitely good structure. So even when the market's selling off and everyone's going, the sky is falling and stuff, it's just really always about the charts. What are the charts doing? And when you look at the charts, you know, you see a lot of good structure here still. So so what are we going to do about it? Well, it's right now it continues to look like another buy the dip opportunity. We have 7 or so long positions, and we're just going to make the most of those, and should we continue to rally here from support, we'll be taking profits, and we'll end up taking profits in most of our positions here. So it's kind of an in the zone opportunity, and we're well positioned to benefit from it. And once we lock in those profits, we're just going to be patient and sit tight and allow our trading plan to work, which is letting stocks come to us and waiting for the next in the zone opportunity. So that's where we stand. And so this is a really great time to get involved with us with our 15-day free trial, because almost all of our stocks are sitting at support here and in tandem with the indexes. So it's a great time to pick up some of them. And if you want to take a look at all of our current positions, all the stocks that are on our watch list, and take advantage of future trades we're going to be doing, this is the way to do it. Just go to our website, sign up for our 15-day free trial, no credit card, just all we need is the email you want it sent to, and you get everything our paying subscribers get completely free for 15 days. So I don't know how to make it any easier than that. So kind of short and sweet today, Dennis, but that's the reality, and I live in a reality world, and I'm just trying to present reality to folks, and hopefully this bounce is the start of something more, and should that happen, we'll be seeing some nice profits here.
Yeah, cool, Dave. And so now you said that you live in the reality world, but I know you live in California, so I'm questioning that, you know. And
yeah, a little bit of a environmental hazard sometimes, but yeah.
So, and it was really cool yesterday having lunch with Dave, because it was right about what was it, 11:30, between 11:30 and 12:15 or so, and Dave's sitting there at his club with his back to the wall, right? And so I come in and I sit down, and we're getting ready to have a bite to eat, and all of a sudden he's not paying attention to what we're talking about, right? And so his eyes are jetting over to the big screen, this huge screen, like it was like 97-inch or something like this huge screen TV. And he wasn't cheering that the market was going down, but he was just sitting there going, oh, as the market was ticking down, as it kind of did a little bit of bounce into the end of the day and then fell. And he's going, oh, looks like the sell-off is continuing. And sure enough, that's what we saw yesterday. But that was a lot of fun, David. But I just had to tell a little story about you. You weren't rooting for the market to go down, but you definitely weren't, overly concerned that it was going down. And there's a lesson.
Well, it's just realizing that's just part of the process, and sometimes
right on.
The best rallies are after a day like yesterday, where everybody is just panic selling, and every time you look at a stock or an index, it's down more than it was before the last time you looked at it, and it's just one of those things, and that sometimes marks short-term bottoms in the market.
Oh, exactly, and that's one of the things. If folks, if you're ever wondering, there's kind of like a pecking order of things that make good, either good, strong support and or resistance, and one of the things is that horizontal support and resistance tends to be your strongest of the three types. Then there's the lateral support resistance, oftentimes defined by a trend line, and then the last being the moving averages. And I think it's a toss-up between the moving averages. Moving averages are stronger than a trend line, but at the same time, not quite as strong as where you can actually draw a horizontal line, defining levels of support and resistance. And so as you're going down your pecking order of seeing where things are bouncing, you get something that's close to horizontal. That's a good place to plan trades around, because that is kind of like the line of demarcation. If it bounces there, you jump in, and then the thing about it is you can plan an exit being a stop loss if the prices drop below that a certain amount, because that's where the prices shouldn't go if you're going long. And so it makes it really easy to make up your mind and go, I'm going below a certain level, I'm done, I'm out. And I usually give it 15 cents to 50 cents. So let's move on to the charts. Okay, active trend trading. Here's what where we're sitting as of this week. The only stock that we really that we were kind of interested in this week was VIPS, VIPS. We planned that one. It is slightly up right now after coming within a penny of hitting its stop loss yesterday. The AMBA trade, AMBA, did close out. That was on the last 50 shares and it closed out yesterday when it hit its stop. Well, that would be a profit stop, not a stop loss. And so here's where we're sitting for the month so far through the 16th with the trades that we've done, both income generated and capital growth. And for right now, David, what I'm really after on some of the trades is, yes, I would like to build a portfolio of about 4 stocks and plus a good index ETF to go longer term, and so I may be holding up to a small piece of certain positions, but I'll still obey my rules and exit if if my rules are violated. I was writing down earlier that what's so critical is I was writing it down in my journal, and basically what this one comment I made yesterday as I was jotting this down is, sometimes we have to wait for our rules to work. Wait for your rules to work. Oftentimes if we get out in front of our trading rules, you get hurt. And if you lag your trading rules, you get hurt also. So the thing about it is just to be vigilant in trading your rules. So with active trend trading, our motto is to clarify, simplify, and multiply. And our objectives are just basically to provide a clear and simple trading system for busy people so that they can become wise and profitable winning traders. I'm really pleased with some of the new features that we've introduced. The free alerts for our premium, free text alerts for our premium and early morning alert members, and then the affiliate buttons were going to be available starting this weekend. I'm excited about that. And one of the things that we're really excited about, and I just want to make a special offer to the people who are members of How to Make Money Trading Stocks, is this early warning alerts. The regular yearly subscription is $8.99, but we're reducing 60% just for How to Make Money Trading Stock Guys. here is the place to go for the link on the website. I'll leave that up a second for you to copy that down. And this link here, you need to copy it down because you can't get to that link in any other way than having it written down on your paper. This has turned out to be just an absolutely awesome warning alert. We're currently under an alert warning. Not ready to trade yet, but we're getting close. So with that, David, I think, oh, and by the way, it is for index ETFs. So that's about all I have today, David. We've concluded in right on time. And I want to say to everybody, see you next week. Keep growing the egg. Now, when we're in Florida, we're probably not going to do that Friday show, right?
Yeah, probably not.
Okay. And so, but we'll be putting out the broadcast, or putting out information to let everybody know whether we will or we won't, because we don't know what the accommodations are going to be like. And now that for being able to do that particular show on that Friday. So, David, thanks a lot, and we'll keep the video rolling to cover if anybody wants to talk about any stocks. So please keep your growing the egg and trade wisely and profitably. So, does anybody need to talk about a stock? And if you do, you can put in the ticker. We'll get going. Okay. Dave, do you have either ZLTQ or NBIX or ABC or Gentex?
What was the other, after ZLTQ, what were the other ones?
NBIX. I'm not familiar with that one. And the other one was ABC and Gentex, GNTX.
I don't think I have any of those, but I can easily draw them up while if you
How
want to pick one.
How about NXPI?
Yeah, I've got that one.
And AYI? Okay.
I don't have that one.
Okay, let's take a real quick look here at if you can get, what'd you say you're going to get, Gentex and ABC?
I have NXPI.
Okay.
But I can do any other one you want too.
Okay, if you can get Gentex, GNTX, and ABC, I'll cover the NBIX and ZLTQ.
Okay.
And AYI. What do we got going on here, guys? We've got one, the momentum on this took off. It's a biotech company. The daily trading range has now jumped on average about 500,000 shares, about 470,000 shares. It was nice, slow and steady, moving up, and then we have basically gapped up. You know, if you're already in this stock, great, you hang on, and you can basically use the 8-day moving average or even the 20-day moving average, a violation of that, or a close below and then a break of below that day as your exit point, or you can start drawing some patterns in here. If you're not in the stock, what you're looking for is basically a pullback. I'd be looking for a pullback back into one of the moving averages, preferably a 20, or a consolidation while the moving averages catch up, and then for it to bounce higher. This has gone. You got to remember that this now has run up in excess of 100% since the middle of last year. And the momentum looks, like I said, the momentum looks really good on it. Real high momentum, but this, and this is kind of saying we may be, ready for a rest. And so I'll pop up the other one. Which one was the Z? What is it from? then I'll pop back to you, Dave. Again, on all these stocks where, if I don't know where they're coming from, I'm going to do a stock checkup on them. This one, average volume about 460 to 460,000 shares, just on the fringe of what because my limitations is I look for stocks that are trading 500,000 shares. But I want to do a stock checkup on this to see if it is a leader or a lagger, because just because its price action looks pretty healthy doesn't necessarily mean it is a leader in its field. I want to know where it's set up. Are these moves due to news, or are they due because they are increasing the value of this company? But,
yeah, Dennis, I actually own this stock personally. We didn't feature it in the newsletter, but I mean, it's a young company that has this interesting product that reduces fat bulges that don't respond necessarily to diet or exercise. And
oh,
so
like mine, huh?
It's kind of like a Botox type play, basically. Just personal improvement, that kind of thing. And it had a big day 2 days ago because it spoke at the J.P. Morgan healthcare conference, and they pre-announced some earnings, and which were better than expected. So that's what that big spike on Wednesday was.
Yeah, well, it is putting up a pretty nice pattern here, David, that I'm seeing. Is basically you can take up here at 30 and down here at 26. And so if it does break a sustained breakout above 30, it's probably going to take it up to 34-ish, and that's a little bit over a 10+% gain. And so that's
I mean, the reason I didn't feature in the newsletter, it hasn't really formed a really great pattern that I can work from. But like I said, I'm just one of those. I believe in the story, and I saw some nice action on Wednesday, so I picked it up.
Well, one of the things that I do like about it, David, and again, this is partly the way I draw up my charts and all that kind of stuff, is I like how it's got good range and scale. Range determined by how much it moves on a weekly basis, and so we're getting at about a weekly range of about 3.68. So that's about a 10% move on a weekly basis. On average, a little bit less, some a little bit more, but that looks pretty good. But then also the scale, in that this dark line here is a 10% envelope based on the 20-day simple moving average. And look, it moves pretty well within that. And in some cases it exceeds it, or it definitely respects it. And if you can catch a stock where you can see both sides of the envelope, and it looks like it's moving up close to those, the boundaries of those envelopes, that's telling you that it's got the kind of scale that if you're a patient trader, can pay off for you. You ready to show your screen?
I am.
Okay, I'm switching back to you.
Okay, so I was asked to look at NXPI, ABC, and Gentex. So out of the three, the two I would, for me right now in this market, with it being so volatile, it's kind of a flight to quality. So Gentex, it's made some nice moves, but it's low priced, and I haven't really heard much. I don't know much about it. I mean, they make I think they make the rear view mirror technology for cars. So it's kind of in a industry group that's kind of near the bottom. So I would stay away from it for now. It's also broken the 50-day. So I would just let that set up and form a whole new base if you're that type of buyer. With the ABC and NXPI, they're both are trying to break out here, but they're getting stuck in the downdraft of the market, and so far they're holding support at the 50-day moving average. And they're kind of in the middle of the zone stochastically. So I would, I don't know. I think there's some better opportunities out there right now, but I would definitely keep them on the list for sure, because so far, they're performing very well. I mean, ABC had this nice breakout and it's pulled back to the 50-day for the first time, so that's a good time to pick it up. But I'd like to see a little bit more of a pullback and then a a pretty nice move on some strong volume to consider it for me personally.
Yeah.
Same thing with in XPI.
Yeah, right on. So yeah, I'm sitting there looking at your chart. I mean, so what's really interesting, what I'm finding about some of these, some of the stocks that we're evaluating, Dave. I know you guys hone in on real strong IBD growth stocks. I do the same thing, and I'm finding that for many stocks, they're either really washed out, and from my perspective, I'd be looking for short trades on them, or they're really being rewarded and they're extended, and I'm looking for pullbacks for long trades on those, and that it's that way in a lot of the different stocks that I've been looking at, and that's one thing, and so cool. Here is a question. I'll let you see if you want to answer this. General question on do you have any recommendations on a well-capitalized broker with the increasing volatility and the FX halt today? I did not realize the FX halted today. Is there anything we need to consider when choosing a broker?
I don't know. I never work with a broker, so I can't really comment. I mean, in terms of a firm to where I do my own trades, I'm all for the discount brokers, Charles Schwab, E-Trade, Ameritrade, Fidelity, those types. But
Yeah.
I've never worked with a broker, who actually does trades for me and recommendations and stuff.
Yeah. Well, I know that one of the things to make sure you look for is to make sure that they've got the proper insurance and all that type of thing from that the government requires to provide provide protection up to a certain amount on your accounts. But like I trade, I traded over 20 years with Fidelity. And now I trade specifically with TD Ameritrade because I like their trading platform, the Thinkorswim platform, because it provides me the flexibility I need as a trader. And so, do I get into the nuts and bolts of how well capitalized they are? No, but because, one, they've been around for a long time, and secondly, they do have that insurance requirements covered. And so that's something. So I hope that kind of answered your question. Okay, cool. Any other stocks? Because if not, okay. I want to show everybody just one LNG. Do you have LNG? Oh, that's liquid natural gas. LNG. Let's take a look real quick at LNG. It is liquid natural gas, right? The ETF for that? Or is that UNG? Oh, no. It's an energy group. Ah. Yeah, good volume on the good volume for this one on, and
You're still on my screen, Dennis.
Oh, well, no wonder. Why didn't you say no? That's good. So I know that I just need to switch back to me. There we go. Interesting looking little stock. What kind of, let's see, Judy, what kind of energy does it concentrate on? Is it oil? Or natural gas? Or liquefied natural gas terminals. Cool. Okay. So it's not really in the exploration, it's in getting the distribution system out. This is actually looking kind of good, don't you think, David? From it's got good volume. I would have to check the stock checkup on it, but it's just, we've now put in a higher low. Yeah, we just put in a higher high. I have to do a little bit more research, but from a pure technical standpoint, I'd be looking for a bounce back off the moving averages, and it could go into a nice little bigger cup pattern. And so what is its, looks like it's got pretty good range, pretty good scale, and if it goes from here back up to the past high, you're looking at about a 14% gain. Now, that would be over several months, and so you're going to have to see is 14% gain over a significant period, because from here we're looking at September of last year through now, so that's another 4 to 5 months, so 15%, 15 plus percent would be something reasonable over, a 3-4 month period. Overall rating with IBD 28. That's not good. So, thanks, Dorothy. Real estate. Yeah, Harry, on the ETFs, I typically just stick with, I don't get into the individual sector ETF. I stick with the index ETF because for me they give me plenty to play with. I can just basically right off the bat tell you what I don't like about the iShares US Real Estate is its scale is really, really poor. It's a slow and steady stock. That I'm not saying that it's not that it's not interesting, but it is slow and steady. But over the last 2 weeks, it has gone up 4%. Not bad. But again, I go immediately and I look how well is it fitting within that 10% envelope. And for me personally, it doesn't get my attention. Although it did last year. Let's take a look here. Last year it was up 20%. It does put in okay patterns, and it is currently in an uptrend and extended. It will be at some point in the very near future doing a pullback to the 20-day moving average. Okay. Dave, you got anything else today, bud?
I don't.
Okay, Russell are more volatile, and the Russell is more volatile and related to oil. Yeah, it is. You're absolutely right. I do not. I got one more stock, and that's not it. Okay. Cirrus Logic. Again, I didn't take a look at the, this has not been on the IBD watch list in quite a long time, and I had to see what it would be like on a stock checkup on it. And what I'm seeing right here, Judy, is basically the price action on this bouncing between 23 and 24, almost up to 25, is really getting kind of disorderly and not following a real good order. It almost looks like it has reached this level of resistance up here and maybe preparing itself to go back down. It's been in this particular range now for almost a little bit over about 2 years. So it's rolling from its extreme of 25 to 24 back down to 18 or 17. That's that's an interesting, that's a nice gain or a nice loss, but right now it has done nothing until it starts breaking out of its range. So, okay, folks, with that, I'm going to sign off the recording.